Tuesday Coffee with Dr. Anna, where I would invest if I were building a portfolio today.
Good morning and welcome to Tuesday Coffee with Dr. Anna.
Pour yourself a coffee because today we're going to talk about one of the biggest questions facing investors around the world.
If you had fresh capital to invest today, where would you put it? I have spent more than 20 years managing institutional portfolios, working in global macro investing and multi-asset strategies. I've lived through the dot-com bubble, the global financial crisis, the Eurozone crisis, COVID, and the inflation shock. And now what many people are calling the artificial intelligence revolution. And one thing I've learned is this: the biggest investment opportunities often appear when everyone is looking somewhere else. Today, everyone is talking about AI, but successful investing is not about buying the most exciting story. It's about understanding where value exists, where risks are misunderstood, and where the world may look different in 5 or 10 years. So let me share how I think about markets today. First, let's talk about AI. I believe AI is not a fad. Remember the internet boom? Amazon survived. Google became a giant. But hundreds of internet companies disappeared. Technology can change the world while investors still lose money if they pay too much. That's why I like companies with strong existing businesses. My first choice would be Microsoft. Microsoft isn't simply an AI company. It has enterprise software and cloud computing. It has one of the strongest ecosystems in the world, generates enormous cash flow, and has the strength to invest in AI. My second choice would be Alphabet. People forget that Google processes billions of searches every day and owns YouTube. It has a rapidly growing cloud business and is investing heavily in AI. The market often focuses on the risks. I look at opportunities. Another company that interests me is Oracle. Many investors worry about the amount of money Oracle is spending. But AI requires enormous computing infrastructure, and Oracle is becoming a major player in that market. Sometimes the best investments are companies that are temporarily unpopular. But here's something many investors miss. The AI revolution is not just about software. It's about infrastructure. Think about what AI actually needs. It needs data centers, it needs electricity, it needs cooling systems, it needs fiber optic networks, it needs real estate. That's why I also like infrastructure companies such as Brookfield. Whether AI wins or loses, somebody has to build the roads, bridges, and power stations of the digital economy. History tells us that selling shovels during a gold rush can be just as profitable as digging for gold. Now let's talk about energy. I think one of the most overlooked investment opportunities today is uranium. Many people don't realize how much electricity AI consumes. Every chatbot and model requires huge amounts of energy. Many countries are returning to nuclear power because it provides reliable baseload electricity. If that trend continues, uranium demand could grow. One company I watch is Cameco, but there are also uranium ETFs. I believe the intersection between AI and energy could become one of the defining investment themes of this decade. Another commodity I like is copper. People often call copper the metal of electrification. Electric vehicles need it, power grids need it, renewable energy projects need it, data centers need it. Demand is growing rapidly, while new mines take years to develop. That combination could create attractive opportunities. And then there is gold. I know some people think gold is old-fashioned, but gold has survived every financial crisis in modern history. Governments change, currencies change, gold remains. In a world with high debt levels and geopolitical tensions, I think gold still deserves a place in many portfolios. Not because I expect the world to end, but because diversification matters. What about bonds? This may surprise some younger investors. For many years, bonds were boring. Interest rates were close to zero. Yields were tiny. That world has changed. I believe bonds are becoming attractive again. Long-term US Treasuries could perform well if economic growth slows. UK gilts are also offering yields that many investors haven't seen for years. Bonds provide something many people forget about: income. And they can also provide stability during equity market stress. What if you don't want to pick individual stocks? That's perfectly reasonable. In fact, ETFs may be the best solution. For broad US equity exposure, I like the Vanguard S&P 500 ETF VOO. If you want global diversification, I like the Vanguard Total World Stock ETF Vermont. If you believe in the AI infrastructure story, the VanEck Semiconductor ETF SMH gives exposure to chip companies. If you want exposure to gold without buying physical bullion, the Spider Gold Shares ETF GLD is an option. And if you believe the nuclear story is beginning, the Sprott Uranium Miners ETF offers diversified exposure.
So how would I think about constructing a portfolio? Not by putting everything into one trade. I would think about balance.
Perhaps something like 40% broad global equities, 15% AI and technology leaders, 10% infrastructure and energy, 10% gold and commodities, 10% government bonds, 5% uranium and nuclear energy, 5% emerging opportunities, 5% cash. Now, that's not a recommendation. It's simply an illustration of diversification because it's one of the few free lunches. Let me also tell you what I would avoid. I would avoid chasing social media hype. I would avoid buying something simply because it doubled last month. I would avoid believing you can get rich overnight. The greatest investors I have met were disciplined. They managed risk. They stayed patient. They understood that preserving capital is just as important as making returns. Warren Buffett once said that the first rule of investing is not to lose money. The second rule is never forget the first rule. And here is my biggest investment theme for the next decade. I believe the first chapter of the AI revolution was about building technology. The second will be about monetizing it. The winners may not be the companies making the most noise today. They may be the companies quietly generating cash flow. Our job is not to predict the future perfectly. Our job is to build resilient portfolios that can survive uncertainty. Because wealth is rarely created through one brilliant trade. It is created through patience and the extraordinary power of compounding. So now I'd like to hear from you. If you had 100,000 pounds to invest today, where would you put it? Would you choose AI, gold, uranium, copper, bonds, infrastructure, or broad market ETFs? Leave your thoughts in the comments because I read them all. If you enjoy these conversations about building long-term wealth, please follow me at Drana Armstrong. And if you'd like to explore how AI can help you make better decisions, try AIMi for free at chataimi.ai. Please like this video, subscribe to the channel, and share it with someone who loves investing. Until next Tuesday, enjoy your coffee, stay curious, and invest wisely.